Don't just, take action based on one particular aspect of a technical chart. Seek multiple confirmations. The more, the better.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers. Welcome, everybody, to another episode of Talking Trades. Kevin Wadsworth, my friend and partner, myself, Patrick Karim. And Kevin, today we'll talk to you about multiple evidence, multiple confirmations. What does that mean? Well, there's many tools you could use in TA, and understanding which each could bring to the table and the evidence that it helps you assess better the probabilities. Well, Kevin's just going to do a brilliant showcase for you today.
Thank you very much, Pat. I'm going to certainly do my best. Okay, so we're going to talk a little bit about Bitcoin today, and we're going to talk about how we can anticipate what might be coming in terms of where the price is likely to halt, targets, that kind of thing, profit taking. And it's all about multiple evidence. It's about looking at more than one piece of the evidence jigsaw puzzle. So hopefully you're all seeing the same chart that I am now. It's the Bitcoin chart priced in US dollars. You can price Bitcoin, of course, in all sorts of different currencies, and we'll talk about that in a moment. But this is Bitcoin priced in US dollars, and this is how the chart looked around about, I suppose, several weeks ago, shall we say. It was back in October. And Bitcoin was just showing some signs of breaking out at that point. And what I've got drawn on here is a couple of lines representing a resistance zone. Okay, it's not a resistance line, it's a resistance zone. It's a zone of resistance. Now, it looks a bit random on that particular chart because a little bit like the gold chart when it stopped at $2,700, all we've got is one set of touch points here and another one here. If I put it on the line chart, you can see it a bit more clearly. The bottom black rising resistance line, and then there's an upper black rising resistance line, and the upper black one only makes sense when you look at it on the candlesticks. If you put it onto the line chart, then really it's the bottom one that you're focusing on. Okay, now there's clearly a little bit of leeway about where you place this as well, because you're doing it by eye and it's not exact. You make a slight movement error and you're talking about a few $1,000s. Okay, but regardless, we can say that it's possible that we're going to encounter some resistance up here somewhere. Now, there's also another technique that you can use, or another couple of techniques that you can use, and this is all about multiple confirmations, okay? So these red arrows you can see at the top of the chart here, they're there for a reason. These are what we call measured moves, okay? And a measured move is what happens when you get a breakout. So I've got a horizontal breakout going on right about there, very clear horizontal breakout. Then it moved up, consolidated, and your measured move is taking an arrow exactly the same size and placing it on the point of breakout. And also, you might have noticed there's a third red arrow, and that's because we had another measured move here. I'm just going to put the horizontal breakout line on for you. So you can see that in broad terms, and if I just lower that red arrow right to the bottom there, in broad terms, the expectation is for a measured move that matches the first one. First move, the second move out of the breakout area, the third move. So that just gives you a very rough and ready estimate. That's, you'd often notice in bull market runs that you get this series of, they're sometimes referred to as stair steps. Okay, and this is that stair stepping process in action. So that's a second piece of information that the price could halt somewhere close to $100,000. There's another one here at the bottom of the chart, and this is distance from moving average. And I've got the distance here from the 36-month moving average. And if you're astute, you will notice that there's a yellow resistance zone on that distance from moving average. Cast your eyes to the left-hand side of the chart. The distance from moving average got to that level, and then it fell back. And then it broke out. And when it broke out, in fact, each time it breaks out, you get the bull market peak. You have the, or you get, what I should say really is you get a peak, a significant peak that doesn't get exceeded for many, many months, or in some cases even years. So you break out through that yellow zone, you get a peak, and then it's all over. Break through that yellow zone, you get a peak, and then it's all over. and then the same thing again. Okay, so that yellow resistance zone is the zone that you need to cross in order to see a major multi-month or even multi-year peak. Now, we crossed that zone earlier on in 2024, this year, and we reached that level up around just above $70,000. And we got rejected, and we've come all the way back down underneath that yellow zone. So what I'm saying here is that if this distance from moving average then reaches that yellow zone again at the same time as the price hits this region that we've already previously identified, then that will be a natural place to take profits. Okay, so I'm going to hit the play button on this, and you're going to see what actually happened. I think you probably know what happened because we've all observed it and seen it. And there you go. And I'll just move the chart across so you can see what's going on. And there you go. That is your third move, third red arrow. And I'll just move the arrow out of the way so you can see what happened. You hit that resistance zone, and we pulled back from nearly 100,000. We fell something like $9,000, almost 10%. And you can see the distance from moving average hit that yellow zone, and we're clearly encountering resistance. So that's a profit-taking area if you're trading this move. Okay, it doesn't mean that we're not bullish Bitcoin in the longer term. Okay, there's no particular reason at the moment to go long-term bearish. Okay, nothing has yet happened to make the picture long-term bearish. But what you do is you sell when you get to a resistance level, wait for the dust to settle, and then re-enter when you have a renewed breakout. In conjunction with that, we have Bitcoin priced in gold. And this particular chart has a resistance level that we've just hit. I'll zoom right in so you can see that. Just let me expand the scale. And you can see we've just hit that resistance level for Bitcoin priced in gold. Okay, so it's a natural place to pause, consolidate, and wait for the next move. Just because we've put that line on the chart, and this is what a lot of people falsely think on social media, on X, when I put a chart like this on X, oh, you're bearish Bitcoin, you're always bearish Bitcoin. No, I'm not. What I'm saying is we've hit resistance. That's a profit-taking opportunity, and now you wait. You just wait, and there's no need to take excess risk. Yes, it looks like on the stochastic RSI we've had a bullish cross, and it looks very much like we're going to break through and go much higher. But we can't make that assumption. It's better to wait for the evidence and then act on the evidence rather than any assumptions. So multiple confirmations, guys. Don't just take action based on one particular aspect of a technical chart. Seek multiple confirmations. The more, the better. Okay, that's it from me for this week, Pat.
Brilliant educational stuff. It could be applied to any instrument, guys. Use TA to get an edge. Thanks for watching. Subscribe, like, and let us know if you want more content like this.